Hi class, welcome to EdVantage. My name is Matt Fisher and I'm your accounting instructor. Today we're going to talk about journals and ledgers. The journal, or sometimes we call it the general journal, is a chronological record of all transactions. In other words, it's a list of all the transactions in date order. The ledger, or sometimes we call it the general ledger, tracks the balance of each account. For example, the cash account would have a ledger that tracks the balance of cash. Accounts payable would also have its own ledger, and it would track the balance of accounts payable. Every account has its own ledger that tracks the balance of that account. In this lecture, we will go over examples of journal entries and posting those journal entries to the ledgers so that you can see how it is done. As our examples, we are going to look at a couple of previous transactions that we have done. Let's look at our first transaction where the owner invested $50,000 in the business. You can see here that we debit cash and credit the owner's capital $50,000. Now, let's look at how this affects the ledger. Here is the cash ledger, and you can see how we put $50,000 in the debit column and then in the balance column. Since this is a new account, we have a $50,000 balance in cash. Let's also take a look at the PR, which stands for posting reference. In the journal, we will reference account number 101, which is the cash account number. In the ledger, we will reference J1, since this entry is coming from the journal, page 1. Sometimes businesses reference it as G1, as sometimes we call it the general journal. Now, let's look at the owner's capital. You can see the second part of our journal entry affects the owner's capital account. We have referenced it J1, meaning that it came from the journal, page 1. And in the journal entry, you can see that we have now referenced it as PR301. Just a side note, for those students who are doing journal entries in the corporate form, this entry would not be to owner's capital, but would be to common stock. Let's look at another transaction. In this transaction, we're purchasing equipment for $10,000 cash. We debit equipment and credit cash. Now, let's look at the equipment ledger. You can see that we moved the $10,000 over to the debit column in the equipment ledger, and we have referenced it J1. In the journal, we have put $150 as the posting reference, as this relates to the equipment account number. Now, let's take a close look at the cash ledger. You can see that our previous entry is in the ledger at $50,000. This transaction that we're currently entering is a $10,000 credit entry to the cash ledger. You can see the $10,000 in the credit column. You can see the overall balance for cash is now $40,000. We reference the ledger J1 since we are still on the first page of the journal. We reference the journal as 101 as this is the account number for cash. Journals and ledgers can sometimes be tricky. Make sure that you spend some time looking at journal entries and posting the entries into their respective ledgers. For our next lecture, we'll be going over the trial balance and financial statements. You will see how we prepared 3 of the 4 financial statements. Well, class, I hope this video has helped you out, and I hope to see you in future lectures.